today I'm going to tell you another aspect of my life that you guys may not actually have known. You all know me as a professional video editor, yes, which is true. I'm a professional video editor, but there's another aspect of my life, another thing that I do, right, that you guys may not have known because I've not actually been updating you or have updated you people on this channel regarding that. I'm a professional Forex trader, or rather, let me put it this way, I'm a struggling Forex trader. I ventured into Forex in 2021, that was 2021, post-COVID-19, after my youth service. And since then, it's just been a roller coaster. And in this video, I want us to look at the outlook of what the market has to offer this coming week. Like, what is the market, what is the market telling us, right? In preparation for the coming week, right? So we are going to basically do more like a top-down analysis on this video. And I'm going to start with one of my favorite pairs, which is GbpUsd GU. So follow me through. So this is my trading view. I do my analysis on trading view. I love trading view so much. So I start my analysis on the monthly time frame. Now remember, we are talking about, at the initial, I said that we're basically going to kind of do a top-down analysis to kind of what the market has actually been doing, what it's doing now, what likely it will do. Then we react to the market, right? So I start my analysis on the monthly time frame. And I know part of the beginner classes that I took back then when I started out trading Forex was candlestick analysis. That's bullish engulfing, bearish engulfing, tweezers top, tweezers bottom, doji, and all of that. And if you remember, I don't know who you learned from, right? Or if you're a beginner, kind of, or this is the first time you are seeing any video concerning Forex, right? The ideal thing, or the most preferred thing to do is look for your candlestick confirmation on the higher time frame. Like the candlesticks are much more stronger, much more valid on the higher time frame. Now imagine seeing a bearish engulfing on the 15 minutes time frame and seeing another bearish engulfing on the 4-hour time frame. Which one do you really think the market will likely reverse or kickstart with, or start buying from, or start selling from? Obviously that one from the higher time frame, which is the 4 hours. So that's why I start my analysis on the monthly time frame, like checking the basically candlestick analysis on the monthly time frame, because I believe that candlestick analysis on the monthly time frame is will give me a stronger bias of what the market is going to do. So if peradventure I see a bullish engulfing candle on the monthly time frame, perfectly formed, I'll okay, I think the market has actually printed a bullish confirmation that it will soon begin to buy, right? So let's get back into it. So this is the monthly time frame, and the market obviously has been trending downward. That's see lower low, lower high, lower low, then lower high, then lower low, right? Then the market is kind of trying to make another lower high here, then before possibly to tank down. This is just what I perceive, right, that the market is going to do. Like I said, we allow the market do what it wants to do, then we react. This is just a speculation. Let me go ahead and remove this line now. So on the monthly time frame, the market is clearly bearish, right? Clearly bearish. And one of the ways that I use in spotting my reversal for my own strategy is employing the tool called Fibonacci retracement tool. At the point where 61.8 and 78.1, like that zone 61.8 and 78.1, that's where I look out for possible reversals. So, and now when I pull out my Fibonacci tool and I fib from here down to this place. So why am I fibbing from here? Because if you notice here, there's a break of structure here. See, there's a break of structure. It's more valid when you apply Fibonacci after you've seen an obvious break of structure. There's a break of structure here, and like I said, that I like placing my reversal, looking for reversal here between 78.6 and 61.8 somewhere here. So since I've mapped out this, so I'll go ahead and delete the Fibonacci tool. So this is where I'm expecting a reversal. All right, this is on the monthly time frame. So price has come, tanked down, then a reverse, kind of a retracement, choppiness. You see, it's a little bit choppy, kind of consolidating upwards. Right? It's not as smooth as this bearish move. Look at massive bearish candle, massive bearish candle, massive bearish candle, bearish candle. But you see this one bullish candle, you see there's a pullback here, the bearish candle, see there's a bearish candle, then here it tapped our what? 61.8 and 78.6, and now it's printing what looks more like a bearish engulfing candle, right? Though it has not fully formed, it's not actually fully formed because we still have 5 days and 3 hours left for us to actually know what this candlestick will actually be. So, but for now, it's looking more like a bearish engulfing candle. So now look at the first confluence is that the market has been ranging, has been doing what? The market has been selling, right? It's bearish, obviously. I drew it at the beginning, higher highs, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Then now it's trying to create another lower highs. And I said that the market, might actually reverse from these points, like that this actually might be the end of this temporary bullish move. Why? Because of what? This is a Fibonacci 61.8 level based on my own trading strategy. All right, based on my own trading strategy. And I said also, in as much as the candlestick has not actually fully formed, right? Look at this is a bearish engulfing candle, and this is also kind of an inverted hammer. Right, an inverted hammer on a 61.8 Fibonacci level. And you know what an inverted hammer is at the resistance is a signal that what? That the market is about to do what? To reverse. Then after that, then look at the weak rejection also. It's an evidence that what? That the sellers are in this particular zone. Then after that, again, subsequently, then we now see this bearish move without even a week. All right, so monthly, our bias on the monthly is what? Sell. So I move down to the weekly. What am I seeing also in the weekly, right? I'm seeing a tweezers stop, right? A tweezer stop. If you go to Baby Pips candlestick Bible or candlestick chart, I've forgotten what they tagged it. You get to know that this is a tweezer stop, and a tweezer stop on a weekly time frame. Right? It's actually an evidence. The second confluence for me that this market is going to reverse, obviously, from this place, right? Then also, if I notice something very important here also, there's what they call a change of character. A change of character is a sign that the trend has changed, right? A trend has changed. Now, what do I mean by, let me show you what I mean by that. Now, if price is moving lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? Then instead of price to come back and create another lower high, no, it didn't. It now did something like this, right? Now this is what we call a change of character, right? This is lower high, lower low, lower high, lower low, lower high, lower low, lower high. So it's supposed to come down lower low, then lower high here, then tank down, but it came, broke this particular support, this particular lower high here. This is significant evidence. This is what we call a change of character, that the trend has actually changed, right? So if you want to find, you can actually reverse it as in terms of the buy higher high, low, higher high, higher low. So instead of it coming down to print a higher low, then before breaking, it comes down again and breaks the last structural zone. Let's just practicalize it. Let's just practicalize it for the buy. This is it. Higher high, higher low, higher high, higher low, higher high, higher low, higher high. Instead of making another higher low, but it breaks here, right? So this is what we call a change of character. And when you see that is significant and evident that what? that the trend has actually changed. The market has actually reversed, right? And I try to spot some of these things on a higher time frame, is because when I do on a higher time frame, they are stronger, right? They are stronger than the lower time frames, right? This is just how I trade it. This is just how I keep it simple and real. So this analogy that I made here, if you notice something, if you're keen to observe, this is higher high, right? This is higher low, this is higher high, this is higher low, right? This is higher high here, this is higher low, then this is higher high, right? Instead of creating another higher low here, look at what he did, right? Sorry about that. Now you see, this is a change of character here, you see. You see, this is a change of character. So this is another confluence. First of all, we said what? We saw the inverted hammer on the monthly time frame, confluence 1, right? The second one, the bearish engulfing preceding it, confluence 2. Then the weak rejection, confluence 3. On the weekly, then the Fibonacci retracement, confluence 4. Then on the weekly, we saw the tweezers or tweezer stop, confluence 5, right? Then we are now seeing a change of character on the weekly, confluence 6, right? Then there's also a trend line here. There's also a trend line here that was broken, that is broken. If you notice on the weekly, you see that is broken actually. It's broken as well, right? So this is kind of confluence 7. So what else do you need to see, or do you need to know that this market is actually set to begin to sell massively to the downside? All right. So the next thing I will do is to draw out I'm expecting this market to sell up to this particular place, this particular zone here. I'm expecting this market to sell to this particular zone because it has taken out what? Taken out the first, this initial zone, this zone here. It has broken it. So the next box stop of this market here is here. So we are looking at a 274 pips move, bearish move, at least a 278 pips bearish move. This is just my analysis, right? This is just my own personal analogy, right? We'll get to see if market, if this plays out or not. Subsequently in this video, we'll come back to check and review what we have actually done, right? So now, what am I now looking at, right? In terms of my point of entry, right? And don't forget that this is also a break of structure, right? This is the zone. This is the support that broke the structure, right? That's why I'm saying that if eventually I get an entry, when I sell down to this particular zone, I'm out. If the market breaks down this zone, then the next point of the next bus stop will be this zone, right? But for now, our first target is here. This is on the weekly. Then we go down to the daily time frame. We go down to the daily time frame to find out what is actually happening. And you know, in Forex, market may not actually just move straight in swift succession like that. Sometimes you may be seeing something like, let me say, you'll be seeing pullbacks, right? Lower high, lower low, lower high, lower low, right? So in fact, you might even see a pullback up to this particular zone somewhere here before the market might actually, but I know based on my analysis, right, that the possibility, the chances of the market coming down to this very particular zone is kind of very, very high, right? So now, let me remove this line and draw it very well. Then in terms of figuring out my supply and demand zone, you know, some will use the candle before the inefficiency, but for me, there's a particular indicator I use. But first of all, I'll teach you why I began using that indicator in the first place. Now, the candle, let me say, okay, this is a sell candle here. This candle is a sell candle, right? It opened here and closed here, right? This is the close of this candle, this particular bullish bearish candle here. This is the close of this candle, right? Then this candle, the two candles by the left and the two candles, I don't know how to put it, but the two candles by the left and the two candles by the that precedes that by the right, if this candle is lower, if this candle closes lower than the two candles by the left and the two candles by the right, this is how I figure out my demand zone. So let me say this one didn't come anywhere closer to where this bearish candle closed. Then this one a little bit came closer, right? But it didn't surpass it. Then this one also didn't even come closer. Then you see this, the first candle here by the left, the second candle here by the left as well. Then the first candle here by the right, the second candle here by the right. Then this one close up below the two candles by the right and the two candles by the left. Then if there's a candle that does that are closed below the two candles by the left and the two candles by the right, that's how I figure. I just automatically use that candle to draw my demand zone. So this is the candle here. This is the daily time frame. So this is my demand zone here. All right, this is my demand zone. So I'm expecting price to pull down to this very particular zone. And here, if price gets to this place and I see a reversal pattern printed here, then maybe I might actually buy. But for now, we are looking at what market might actually do this coming week. So we are looking to sell. So these are my expectations here. Now there are actually other minor zones here. This is a daily and a weekly break of structure. But if you go down to the 4 hours, right, you will still see other small minor zones there that may actually the price might actually react off of. So you see what I was telling you about change of character. You see price came down here, moved up, came down here, right? Then did a change of character. You see a change of character here, then pulled back here, and price started buying massively. So this is a break of structure. This is a break of structure here. This is first of all a change of character here, right? Then it preceded by what? A break of structure. You see price started breaking structure, higher highs, higher lows. You see here too another break of structure. Higher low, another break of structure. And as price is breaking structure, this becomes automatically what? A demand. Here it becomes automatically a demand zone. Here likewise automatically a demand zone, and this particular demand zone aligns with our overall weekly demand zone. Right. So now this is a 4-hour demand zone. So it's actually possible that price might actually come here and react a bit, pull back from this demand zone here, then before it breaks it. Right? This is a 4-hour demand zone. So it won't be as stronger as, look at where price is coming from the monthly. Right? So that's just that. So, but we're looking at the sell pattern. So let's see what price has been doing. This is on the 4 hours. So this is on the 4 hours. So is lower low, lower high, lower low, lower high, then lower low, then lower high, then lower low, then lower high, right? Then lower low here, right? So following this 4-hour structural break, So what I will now do is that I'll use my Fibonacci tool again for the 4 hours, because this is a sell. I'm trying to look for a possible entry position for me, right? Where I can actually join this sell move, right? So on the 4 hour, I'll just fib from this zone down here. Then where's my 61.8 and 78.6, right? This is my Fibonacci tool here, right? So, and guess what now? On the 4 hours, This is an equal low. So this is what I'm looking at, right? If price comes back here, I'm looking at this zone, also this zone, then also this zone. Remember what I told you about how I draw out my demand and supply zone? You see this candle is where it closed, where this buy candle closed. This one is below it. The candle by the right, first candle by the right is below it. The second candle by the right is below it. Then the second candle by the first candle by the left is below it. The second candle by the left is below it. So this automatically becomes my what? My demand zone, my supply zone. So this is what I'm looking at for this week. I'm looking or anticipating rather that price will pull back here. If it gives me a wonderful confirmation from this zone, I'll sell down to this particular zone here, this 4-hour demand zone that I drew. Then if eventually it comes here and didn't give me the confirmation that I want or that I need, I'll allow it to get to this particular zone then before selling, right? Then also, in as much as everything is aligning, the confluences are all aligning and it's telling us a sell, the forex market is dynamic. It can actually come back, break all of these structures and begin to buy up. You never can tell. That's why you need to have entry confirmations and actually know that no strategy is perfect. Then also employ a very good, wonderful risk to reward management, right? Like, look at how already the mindset I'm going to use in entering this trade. Obviously, I don't take any trade that is less than 3-to-1 risk to reward. So from here, this is where I'm targeting, right? I'm targeting here. That's 200 pips, right? Then my stop loss will have to be above, right? Somewhere here, above here, 53 pips. Somewhere here. This might not actually be up to that 53 pips because I'll still scale down to the 1 hour and 50 minutes. Maybe at maximum, my stop loss will be 25 pips, right? And the overall target will be what? 200 pips. So most of the times I usually aim for 5x, 6x, 7x, x, and 8x, right? Then imagine if I take a trade 8x, or let me say at least 3x, and I lose, right? I lose, price came and took me out. Then I wait for a price here again, right? Price comes here, right? And takes me out. For instance, price comes here and takes me out. I wait again. Then maybe I took it abruptly without confirmation. I wait again. After my confirmation must have printed here, I took another entry again, my third trade, right? Then I win. This is 4-to-1. No, not even 4-to-1, more than the 5x. Right? So I reached 1% here, I lost. I reached 1% here, I lost, right? So I reached another 1% again here, and I made 5%, right? That means plus the 2% I've lost here, I'm still over 3% in profit. So that's why risk management is also very key and very important when it comes to forex trading. So these are the zones we are looking out for this week on the on H4. These are the zones. This is what I'm looking at. What's wrong with this? So this is what I'm looking at. So this is what I'm looking at for this week, right? Let's go down to 1 hour and see. This is just a top-down analysis. Right? So this is what I'm looking at. If price comes back to this zone, I'm printing confirmation, I'm going to take my entry, and most of the time my entries are on 15 minutes time frame. On 15 minutes time frame. 15 minutes time frame. In fact, sometimes I even scale down to the 5 minutes to get an entry, so that I'll be able to have a tighter stop loss and a higher gain. So this is just the trade breakdown for GU for this week. This is what I'm expecting for GbpUsd. I know that GbpUsd and AUDUSD, EURUSD, NZDUSD, they are all correlated, right? When EURUSD is selling, obviously GbpUsd will follow suit, AUDUSD will follow suit, and NZDUSD will follow suit. Sometimes gold, right? Then DXY is the direct opposite of all of this space. If DXY is buying massively, please, no matter the confirmation, no matter the analysis you are doing on this on Euro USD, GbpUsd, NZD-USD, please, no matter the confirmation you get, if the XY on the higher time frame has proven to be buying massively, right? Please, no matter the confirmation you get on these pairs to buy, don't buy, because eventually they will hit your stop loss. You are going to lose. So that's just that about trade analysis on GU. If you have any question, you can type it on the inbox section below, on the comment section below, rather. You can type it on the comment section below, rather. And like I said, I still see myself as struggling Forex trader because I'm not actually gotten to those mighty, gigantic level, huge profitability. I'm still struggling. So if there's any way you feel you can actually help me push up my trading and also make my journey shorter and smoother, please. I'm not a proud person. I'm actually a very, very humble person. I'm open to correction. You can actually inbox me like privately. I'll drop my Telegram handle on the description, or you can type it on the comment box. Then I can reach out to you maybe on WhatsApp, or I may leave one of my WhatsApp contacts on the comment box. So any question, please reach out to me on the comment section below. Peace out.